Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Xin Point Holdings Limited annual report. Xin Point Holdings Limited offers a diverse range of businesses and services across various industries. The company's primary focus lies in manufacturing and selling automotive components, including interior decorative parts such as door handles, door trims, and steering wheel components. Additionally, they provide exterior decorative components like emblems, fog lamp trims, and wheel hub trims. The company also engages in the trading of automotive and electronic components, which suggests a significant presence in the global market. Furthermore, Xin Point Holdings Limited is involved in the manufacture and sale of molds, indicating their ability to produce custom-made products for various clients. Moreover, they invest time and resources into research and development, specifically focusing on carbon fiber materials and flexible copper-clad laminate. In summary, Xin Point Holdings Limited's businesses and services encompass a wide range of activities, from manufacturing automotive components to trading electronic parts, mold production, and innovative material research. Xin Point Holdings Limited maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Xin Point Holdings Limited trades at a lower price-to-earnings ratio of 7 times and a higher price-to-book ratio of 1.02 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The balance sheet appears very conservative, with liabilities representing only 20% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 11.74%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of various market trends and factors. On the growth side, North America and other regions have shown significant increases in revenue, with Asia-Pacific region, particularly China, being a notable contributor due to policy support, NEV penetration, and domestic brand competitiveness. Additionally, hybrid electric vehicles, HEVs, and plug-in hybrid electric vehicles, PHEVs, have been gaining traction in various markets, while automakers are shifting their product strategies towards balanced development of battery electric vehicles, BEVs, HEVs, and PHEVs. On the other hand, revenue decline has been observed in China and Europe, with significant drops in sales units and revenue. The decrease in total number of sales units is a major contributor to this decline, while the obsolescence of a heat press machine resulting in an impairment loss also played a role. These factors highlight the importance of adapting to changing market conditions and technological advancements to remain competitive in the industry. The net income of the company experienced a decline in FY 2025 compared to FY 2024, with a decrease of approximately 9.3%. This reduction is also reflected in the absolute numbers, where net income decreased from RMB 563.5 million to RMB 529.3 million, representing a drop of 6.1%. The profit margins of the company also underwent a change, decreasing from 36.3% to 33.5%. The gross profit margin, which is a key component of overall profit margins, also saw a decline, dropping from 36.3% to 33.5%. These changes in net income and profit margins suggest that the company's financial performance has been impacted by various factors, potentially including increased costs, reduced revenue, or other operational challenges. The generation of positive operating cash flow by a company is a crucial indicator of its financial health and stability. In this case, there are multiple sources that confirm the company's ability to generate positive operating cash flow. On page 29, it is explicitly stated that the company generated a positive operating cash flow of RM1,058.1 million in FY 2025. This figure directly indicates that the company has successfully managed its operations and generated sufficient cash to cover its expenses. While the change in working capital on page 4 shows a positive value of RMB 62,102, it is essential to note that this information alone does not confirm the generation of positive operating cash flow. However, when combined with the explicit statement on page 29, it further supports the conclusion that the company is indeed generating positive operating cash flow. In summary, based on the provided information, there is strong evidence to suggest that the company is successfully generating positive operating cash flow, which is a significant indicator of its financial health and stability. The performance of various regions and segments in the market has been a mixed bag. On the positive side, the European market has shown modest growth, indicating a stable and thriving economy. This is a welcome trend for businesses operating in this region. However, other areas have not fared as well. The Chinese market has experienced moderating growth rates, suggesting a slowdown in economic activity. Furthermore, the North American market has been characterized by cautious demand, implying a more reserved consumer behavior. These trends are concerning and may require adjustments from companies operating in these regions to adapt to changing market conditions. Management's outlook on company strategy: the company is set to embark on an expansion plan that will see the investment of new facilities in key markets. Specifically, management has identified China and Mexico as prime locations for this growth initiative. This strategic move aims to increase production capacity, positioning the company for future success and increased competitiveness in its industry. The company's financial performance for the year 2025 reveals a notable trend. On page 11 of the report, it is explicitly stated that the total amount of dividends paid out was RMB 447,477,000. This significant figure underscores the company's commitment to rewarding its shareholders through dividend payments. Furthermore, on page 31, the report unequivocally confirms that the company did indeed pay dividends in 2025. The clear and direct language used leaves no room for interpretation, solidifying the fact that the company has a history of paying out dividends to its investors. Concerns about inventory buildup and supply chain disruption are evident in recent data. An inventory buildup is noted on page 14, indicating a potential issue with excess stock levels. The situation is further complicated by supply chain disruptions, which can be attributed to several factors. Regionalization and localization efforts have led to increased trade barriers, while tariff adjustments and geopolitical risks have also played a role. Additionally, rising customer requirements for supply chain security have added complexity to the system. Data from page 21 suggests that these issues may be having an impact on sales figures. A decrease of 24.4 million units, 6.7%, indicates potential problems with supply chain efficiency or demand. These concerns highlight the need for careful management and optimization of inventory levels and supply chains to mitigate risks and ensure business continuity. That concludes the financial summary for Xin Point Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.